You're listening to European Parliamentary Research Service podcast on the single market for services.
Like the free movement of goods, the freedom to provide services across the EU is one of the core principles of the single market.
But despite many barriers having been removed since the liberalisation efforts started in the 1980s, it is still easier to move a crate across Europe than it is to move an accountant or a car mechanic. Want to know why? Join us on the analysis of the single market for services.
Services account for over 70% of Europe's output and a similar share of jobs, but for only a fifth of the EU's internal trade.
The smaller size of the intra-EU market for services as opposed to goods may be due to the fact that many services are less tradable than goods and can only be provided locally. Nevertheless, globalization and developments in communication technologies are encouraging more and more companies to offer their services across borders.
The right to do so is enshrined in the EU treaties and has been championed further by the EU Services Directive. Adopted in 2006, this aimed at removing red tape and making it easier for service providers to establish themselves in their home country as well as abroad, and to provide services inside as well as outside their own country.
Although certain sectors such as healthcare or social services were left outside the scope of the directive, it covers services accounting for 46% of EU GDP in sectors like retail, tourism, construction and business services.
In addition, specific rules have been developed for the financial services sector, transport, telecommunications, postal services and broadcasting, as well as for patients' rights.
But the freedom to provide services across the EU is linked with the mutual recognition of professional qualifications, which has been guaranteed by EU law since 2005. Before that, a qualified professional in one EU country would not necessarily have met the requirements to practice in another EU country unless he or she had completed an entire training course in the host member state.
To respond to the increasing mobility of professionals across Europe, the directive was modernised in 2013 to ensure a smooth system for the recognition of qualifications.
And the trend hasn't stopped. The number of posted workers increased by almost 45% between 2010 and 2014, when approximately 1.9 million European workers were posted across EU borders.
To ensure that these are not competing unfairly with local workers and that they enjoy the same pay and working conditions for equal work, the Commission has set out to reform the rules governing the posting of workers, though it may prove to be a tough battle.
Indeed, but let's have a look at the main challenges to the development of a real internal market for services. Stay with us.
Intra-EU trade in services has been less affected by the crisis than trade in goods. However, experts agree that further integration of the market would increase cross-border trade and competition in services, benefiting consumers with lower prices and increasing financial gains. So why don't we do that?
Because there are several obstacles still in the way. In a number of key business sectors, and notably in the construction sector, administrative barriers are proving difficult to remove. Different systems for authorisations, registrations and notifications are required by different member states to be able to provide services, making it very difficult, sometimes even impossible, to operate across borders.
The legal form of service providers and their shareholding structure are also often barriers to free trade in services, as well as different health and safety standards or certification schemes.
In 2014, the European Parliament identified the main stumbling blocks. Some could be addressed through legal measures from the EU, such as stronger market monitoring, but other barriers outside the formal internal market framework, such as different regulatory systems, private law issues, taxation issues, or language, are more difficult to deal with despite their impact on businesses.
So how far are we in the implementation of the Services Directive?
Well, there's been progress, but there's still work to do. A 2012 Commission evaluation concluded that member states had adopted more than 1,000 laws to abolish barriers, a move which was expected to bring a 0.8% increase in GDP over 10 years.
This could go up to 1.8% with more ambitious implementation, but only a few member states seem to be working hard to undertake the necessary additional reforms. According to the OECD, 2013 data show no improvement in the regulatory burden of services, and in some countries the burden has even increased despite the Services Directive.
In 2016, the Court of Auditors criticised the Commission for not following up enough on persistent obstacles because of a reluctance to challenge the principle of proportionality used by some member states to maintain certain barriers. To the court, the Commission's hesitation to undertake action prevents consumers from reaping the full benefits of the Services Directive.
The Centre for European Policy Studies gave a more positive opinion, noting that the directive has resulted in greater intra-EU market access. For the European Parliament, however, a significant number of restrictions persist.
A recent study claims that closing the existing gaps could bring about gains in the order of €338 billion.
That's quite something. But what happens when it comes to international trade agreements? Let's look into it.
Well, deals which include services are fairly complex and need to build on the free movement of persons and common regulations. So in reality, most EU trade deals leave services aside.
Except for TISA, the Trade in Services Agreement is now being negotiated by 23 members of the WTO, including the EU. Together, they account for 70% of world trade in services. After 19 rounds of talks, the parties are getting closer to an agreement to open up markets for public procurement, telecoms, transport, financial services, and professionals moving abroad to work.
The European Parliament is supporting efforts to reach a deal, giving direction and drawing red lines when necessary, as ultimately there'll be no TISA without the Parliament's consent.
That's correct, but let's have a look into the future to see how a truly single market for services may develop in the EU.
Well, to overcome conflicting national interests and legal traditions, the European Parliament has recommended action be taken on a few key points. For instance, to remove anti-competitive laws such as restrictions on opening hours, standardising contracts and insurance rules, and creating a level playing field in public procurement.
MEPs also call for further harmonisation of rules and better transposition of the common rights and obligations which are binding in all EU member states. The Commission should also not hesitate to wave the big stick at infringements of competition law.
In its 2015 Single Market Strategy, the Commission also proposed a number of initiatives to address shortcomings and deep integration in the European services market. It wants to take action to ensure that consumers wanting to buy services or products in another member state do not face diverging prices, sales conditions, or delivery options.
The Commission also plans to develop a European agenda for the collaborative economy. Collaborative economy services, which range from sharing houses and car journeys to domestic services, provide new opportunities for citizens and innovative entrepreneurs. But tensions have emerged between the new service providers and existing market operators.
So the Commission is looking at how to encourage the development of new and innovative services while ensuring consumer and social protection as well as tax compliance.
To further encourage the mobility of business and professionals across Europe, the Commission has also set out to improve the recognition of professional qualifications and facilitate the cross-border provision of business services, construction and other services that generate growth.
So to conclude, a lot of efforts are being made to allow European citizens and businesses to enjoy the benefits of a truly single market for services. However, despite many barriers having been removed and the market being more open than ever to EU-wide competition, there are still many gaps to fill.
You're listening to the European Parliamentary Research Service podcasts.